I'll be giving out my outlook in the market for this quarter, which is Q3 open, July, the third quarter open, and my outlook across currencies and crypto from Q3 to the rest of the year, which is till December, and also show you guys my overall outlook on the market for years to come. Let's go to the dollar so that you guys will see. Because it's a quarterly open, we are going to the 3 months time frame. Looking at the 3 months time frame, right? We're looking at dollar. Some people are looking at dollar as a bullish market, right? But you guys, I want to tell you guys the reason why I'm seeing bearishness on dollar until 228. Let's take a look at the yearly chart for a moment, right? So currently we are bearish from previous leap year. If you look at the leap year tapped into this particular guy, which is the high 222, right? So currently we are bearish. So the open of 224, we had the open of 224 giving us a high. So we are still within the expansion phase of the current leap year, right? So previous year was massively bearish. 2025 was a bearish year on dollar. So and we are supposed to be seeking lower prices within this candle. But the question is, are we expecting this candle to be a range, which is the rest of the year to be a range? I would say I'm not really expecting to be a range. I'm expecting some kind of bearishness within this candle, and I'm expecting a comeback above this candle high. If this candle is to be a bearish candle, but it's not going to be now, it's going to be years to come. So let's mark out this particular order block. This is the yearly order block, 2020 24 opening price. The opening price of the leap year was flipped. So price flipped the opening price of the leap year. Leap year we have 4 years, right? 4 years. So we flipped this opening price with massive dark cross candle. So I'll be because price is always sensitive to opening prices. So the opening price of this other block is my pivots to look for bearishness at least to anticipate the high of the year, right? Because I was actually bullish from first quarter, right? But we are currently about to hit target, which is a level here within the monthly time frame. Now let's go down to there's nothing much here. So and currently we are trading within this price range. We have this price range, right? Excuse me. We have this price range in the higher time frame. So we are anticipating a timed range within a price range, right? The timed range is a 4 year cycle plus this year is 4 year cycle, which is the high of the leap year, previous leap year, and the high of the current leap year. So we are currently bearish. So my R will be currently this low right here. This is the official paired low order pairing. I'm not here to give some education. I'm just here to give outlook. So there's no need going much deeper to what other pairing means currently. So going to the 6 months time frame, right? This way is becoming more clearer. So we ran this high, right? When we ran this high, so we are currently working our way towards this candle slope. This is a range, right? We are working our way towards this candle slope, which is approximately or which is equivalent to this sell side inefficiency in the 6 months time frame. So this is a very big magnet. This is an efficient this is the target I'm looking at in the 6 months time frame. So this sell side inefficiency is a magnet to price. This is my draw on liquidity to price, right? So now we are working our way back towards this particular guy. So we are anticipating a timed range. So it's all about ranges, right? So we are already forming a range within the key level, which I'm not expecting lower prices currently. I'm still expecting some other pairing to anticipate the high of the year, right? So we'll be marking out previous 6 months high as my range, right? So we'll be targeting the sell side efficiency, this gap plus previous 6 months low. Going to the 3 months time frame. So we are currently within this 3 months FVG, this 3 months FVG. I think I need a pointer so that what I'm pointing out will be very clear. I need a pointer. Where do I see this pointer? I think I added it to my tools, but I can't find it now again. I need a pointer. So let me look for it. It's supposed to be here. The pointer is supposed to be here. Um, Guys, please let's move on. Let's move on. So we are currently within this gap, but we are not expecting some instant reaction. So we are expecting the dynamics of price within this pivot to be a complex dynamics, right? So I'm still expecting some kind of delayed production before the high of the year is in because it's not going to be easy. It's not going to be easy. But with the help of the butterfly effect and with the help of ranges, it is going to be easy by the grace of God. So now I'm not expecting the discount, sorry, the premium of this dealing range. I'm not expecting the premium of this dealing range to be met for now, right? Price can still tap the premium. Yes, price can tap the premium. The way I'm saying it, but I'm just calculating the distance and the duration for this particular quarter, right? So I'm expecting the high of the year from this quarter. So it might be probably around next month, which is August. August to give me the high of the year, or it can be last month of the quarter, right? So any month from now, counting down from now, can give me the high. So it depends on when price hits a key level. So if now this guy, the discount of this range, sorry, the premium level of this range if price should use the premium level, which is this 50%, right? That will be a very good opportunity. That will be the best scenario if you are looking at the premium of this range. Now, looking at what we have currently, we have this buy side inefficiency, because the reason why I was bullish last quarter was last two quarters was I was anticipating the low of the previous quarters, targeting the buy side inefficiency with the monthly time frame. So the target is already being met. But remember that every point of fulfillment is a new point of engagement. So we as we are meeting that target, which is the daily, which is the monthly buy side inefficiency, right? Which is this one within the 50%. I'm not expecting this high. I'm not expecting this guy to be met for now. So we are framing the high of the quarter. So let's mark out the yearly opening price, which is January. But the official yearly opening price is supposed to be first Monday of the second quarter. So, but we are just because of this outlook, I'll be using January open from the first quarter open, right? So this particular imbalance on the monthly time frame is my pivot. So this is the opening price of the leap year, which is 224 open. So which is sorry, this is 225 open, but I'm expecting within this 225 open as a key level, or you can call it other block, vice versa. I'm looking at this liquidity pool, which is equivalent to the monthly imbalance, right? So this is the monthly imbalance. So we are expecting the high of the year. So I'm not expecting an instant reaction. That's why I'm still very bullish for the month, because currently we still have the targets not being met, but we are bearish for the year, right? So we are still within the yearly protraction phase. We are still protracting for the yearly until the high is in. So this is in form of the buy side of the curve for an incoming sale program. Listen, this is the yearly protraction phase. Listen, the protraction phase of a range is also a trade opportunity. The protraction phase of a range is also a trade opportunity. So what am I saying? This is also the buy side of the curve for an incoming sale program. So we're expecting a sale program within this particular quarter, which I'm expecting the smart money reversal, right, from this quarter open. Exactly. Now listen. So at that same point in time, we are still expecting higher prices this month. So I'm expecting bullishness this month. So let's forget about expecting the high of the year and look at the current price action. So the dollar is currently bullish towards this magnet, which is the which is the monthly buy side inefficiency, right? So and this is a current buy program. So going down to the weekly time frame, let's mark out the monthly open, which is officially the open of third quarter, right? And going to the weekly time frame. So this is the open of the month, but not the 3 months open. I think 3 months open is going to be from today, being Monday, right? So we're marking out a vertical line from Monday timing, right? So we are still expecting open low high close of the monthly range. Is that clear? Open low high close of the monthly range. So which levels are we looking at? Which levels are we looking at? So if you look at, so this is currently a buy program. So I'm looking at this previous order block at the left side of the curve. This is a pivot. This is a pivot, because you see how what price did at the left side of the curve. Price did what? Sorry, price used this guy for fulfillment of orders at the left side of the curve, and price is still going to use that same level for what? For the buy side of the curve to support price to the upside. So this bearish order block at the left side. Now listen, this bearish order block at the left side is what I call the mitigation basis. Listen, the smart money buy and sell at different time but same price levels. Different timing. This was July. Sorry, this was November last year. So they sold there and they sold here again on January. They sold same level and bought, and they're currently gonna buy within same level but different timing. So the smart money buy and sell at same price but different. But this is still within same price range. What price range is this? This is still within um $99 on the dollar. That's within the range of 100 to $99. They sold here, and I'm still gonna use that same pivot for my pivot that same pivot for my fulfillment of order. So now listen, this is the production phase. This monthly range is the production phase of the this monthly range is the production phase of the quarterly range. So listen, the quarterly range is supposed to be um it's supposed to be bearish, right? But for me to anticipate a bearish range, I have to be first bullish, right? At least to some certain point before I start looking for bearishness, because that is for every bullish range, right? There must be bearishness first before the bullish expansion. That is, we have the if you are to be bearish, we have price open, protract higher, then for bearishness, right? So currently within the first quarter of the on that within the first quarter of the quarterly range, which is this particular month, I have to be bullish within this month. So we are expecting a bullish month on the dollar at least to fulfill these orders. So I'm currently within the last stages at the reaccumulation stage of price. So this is the last stage accumulation before the monthly FEG event. Right, so we are marking out that pivot. I'm marking out this pivot plus this daily order block. Now let's sorry this weekly order block. Now let's go much deeper to daily time frame and let's boil it down. So this is the open of the new month. Let's mark out week 2, mark out week 3, mark out week 4, and go to daily time frame. So this is the daily time frame. So we are currently bearish. Listen, it's not complicated. You guys have to understand this, the logic. So it's all about understanding your bigger ranges first before you understand the smaller ranges. So you can be able to navigate through to find opportunities, right? So currently we are anticipating a bullish month, right? So we are still protracting lower for the monthly life for the monthly, right? So because for me to be bullish, I have to be first bearish, just like the way we are anticipating bullishness for the quarterly range. That's monthly bullishness for the quarterly range. Now we're still going to anticipating bearishness for the monthly range. That's weekly bearishness for the monthly range within the first quarter of the monthly. So I'm expecting week 1 to be bearish, right? At least we are going to be targeting this daily sell side inefficiency. Daily sell side inefficiency is going to be my target, and this point of fulfillment is going to be my new point of engagement. Like this point of fulfillment is going to be my new point of engagement. So calculating the distance and duration, I'm expecting week 2 to give me the low of the month. That is, I'm expecting the high of the month, sorry, the high of the week to the low of the month, right? So now I'm targeting this daily sell side inefficiency within this mitigation base, and that point will be my point of engagement, my point of entry for the monthly longs, right? So let's take a look at what we are having this week. So I'm still bearish this week, but I cannot be anticipating trades without a range, right? The reason why I'm not considering this Friday's range, this turtle soup or Friday's high as my real turtle soup is that I'm not expecting the high of this week on Monday. Trust me, because I want to see some reaction. So some reactions and they come back. So trust me that before maybe before Wednesday, as if Tuesday protect higher, possibly Wednesday high of the week or Tuesday high of the week, depending. But calculating the distance and duration is might be possible on Wednesday London session. Well, let's take a look at the 4 hours time frame so you guys can understand. I'll still mark out a rough sketch work so that you guys understand all of these logics I'm putting in place, what is leading to, right? So we are currently within the sell side of the curve for an incoming buy program. So look at this liquidity pool within the daily time frame, within the daily sell side efficiency. This is my point. This is my price range. This is my price range. So I will not be like I cannot be bearish. Sorry, I cannot be bullish until this level is met. I'm marking out the current during range. This is my current during range. So I'm marking out the premium and discount level of price range. If you mark out this guy, you see that this guy is currently at the discount of this. So which I'm expecting this pivot to be my key level for the low of the month. Remember, the bigger the range, the deeper the protraction. So I'm expecting this level to be made at least week 2 based on distance and duration because price have to dig deeper. The bigger the range, the bigger the protraction. So the deeper the protraction. So currently we are still bearish. So listen, because I'm not expecting a delayed protraction, I'm still expecting Tuesday to give me the high of the week because we have to meet this target within this week. If we are anticipating Tuesday to as next week, which is week 2, to give us the low of the month. So currently we formed a range above the weekly open. Right, this is a range that was formed above the weekly open and within the premises of the premium level of price range, which is this current daily range, right? So I'm not expecting this high to hold. I'm expecting a total soup again above this high and some kind of a macro SMC between negative correlated pairs, which is GU and EU, within this candles range. So I'm expecting this candles range to be met and within a daily order block. If you go here, you see a daily order block there. So I'm expecting this guy to be met on the dollar plus maybe okay this guy we can still meet this FEG before we start selling. So this is the range that was formed above the opening price of the daily, right? So I'm expecting something like this. I'm expecting the high of the week until Thursday open. So we still form the range above the weekly open. I'm still expecting bullishness on Monday or Tuesday. We can expand. Then possibly if Friday or Thursday forms a range for the low of the month, sorry for the low of the week here, react, then that reaction is the trigger for the low of the month. So we can come back for that reaction again for other pairing. Then we can start the buy side of the curve. So we can start the buy side of the curve. Sorry for this. So this is kind of what I'm expecting for the monthly. So the logics I've been explaining all came down to this pattern, to this guy that I marked out. So this is currently the sell side of the curve for an incoming buy program and also the protraction phase of the monthly. And that is if until the low of the month is in, I'm bearish, right? And once the low of the month is in, I cannot ever be countering the low. I cannot ever be countering this guy because there's a difference between retracement and a protraction phase. Protraction phase can also give opportunities, right? So, but I think I have to go much deeper when I start explaining what I can still be giving out free lectures, right, within this channel. So let's see how it goes. This is my anticipation for the month and overall I'm anticipating the high. I'm anticipating the high of the year. Then we can anticipate bearishness towards this guy until fourth quarter open. So if price meets this guy within fourth quarter, we can still come back. right? We can still come back. So fourth quarter can still come back for more premium, like for more premium level of price range, right? Before we can start selling. But this is gonna be approximately, it can come to 28 or so. So which I'm not really expecting. So we are only focused on the current trade opportunity that we have. So more good opportunities are coming. So I'm targeting this low, right, on dollar, and this low on dollar. I don't know why I'm seeing dollar reaching out for this low. I don't know. I don't know why I'm seeing dollar reaching out for this low. But time will tell, right? Time will tell. So everything I've explained on the dollar is still vice versa on currencies, on negatively correlated currencies, right? So going to currencies, I will not waste much time because I've already explained the yearly and quarterly logics. So I'll just mark out the what I'm expecting. So I'm expecting this low to be my monthly target. So I'm figuring out the current range, right? So I want to see price. Let me go to the weekly time frame first. This weekly order block right here. The reason why I'm not using this inefficiency in the weekly time frame is the reason why, because I cannot say it in this video, but the reason why I'm not really looking at that level. So I want to see a deeper production. Let me just say it. I want to see a deeper production. I think I've said it before because of it is the monthly time frame that the monthly range that I'm anticipating. So marking out the opening price, which is this Monday. I still want to see a range being formed around week one. So marking out this candle, week two open, week three open, week four open, and the closing. Just clear, right? And the closing, right? So I'm expecting same thing, the high of the month. So I want to see a range being formed around week one for week two come back. Then we can expect the high of the month. So this daily this daily buy side efficiency is equivalent to the one on the dollar. This is the XY, but there might be a macro SMT there. So we are still anticipating. I'm not really anticipating price to come for that monthly FEG, but for that daily FEG. I mean, but time will tell, right? So until then, so currently week one might not give us opportunity. So to be at the safe side, we can just be anticipating the high of the month to align with the bigger range for more high probability trade. Right. So this is the buy side of the curve for an incoming sale program. Right. So guys, so let's see how it goes. So I'm expecting a range being formed within this week. So the high of this week will not be automatically be the high until the time meant for manipulation. That's the time meant for it. So it can come week three, but I'm not expecting week one because I want to see a range form within this week and a manipulation slash order pairing. They have to be an order pairing from the current range, from the current timed range. So for the sake of price ranges, we might be from this particular price range, which is the the daily FVG, right? So this is the price range, but we are going to be more focused on the most high probability SMTs the current comes from the current time range, right? So not the macro SMT. So the micro SMT is more important than the macro SMTs, right? So now this is the low. I'm not expecting this low to be made. So price can still come for this low, for the low of the that for the low of week one, right? So we are still considering time and duration. With time, is price does price have the ability to come for this low during this week? Yes, I would say, because nothing is impossible, right? You can still have Tuesday, but considering Tuesday's production phase, it does not really have that power. So I'll be looking at Wednesday low of the week. Then we can start protracting that, expanding higher for the weekly range. Then the high of the week will be formed as a range for proper absorptions. As for proper absorptions for next week or week three open. So that is my anticipation. So vice versa again on GBP USD have same logics, but the way I'm seeing it, GBP have the ability to come for this high. GBP have the ability to come for this high. So I'm seeing it, but does it really have? I'm still asking that question. Let's take a look at the weekly time frame so I can be able to conclude on what GBP is saying. But I'm not really focused on GBP. So we'll be looking at this particular rejection block. That's my pivot. That's what I'm looking at, right? For GBP USD reactions. So we can be anticipating the high of the week from this guy. But for now, Tuesday can still be bullish. So this guy can still be meeting this, can still be bullish from this guy coming back before that level is met. You can see flat lower, then expand for the high of the week in. But that reaction can also be, this reaction on GU can be the high of the month. So we can have something like this. That is an SMT that goes like this, right? So let's see how it goes. Same logics, we now have to wait, right? So I'm still very bearish on that is on JU, regardless of what it's doing currently. So I want to see a range. The best way to go about it is to see some reaction, a comeback, then we anticipate the high of the month. So let's see how it goes. So for the BTC outlook, I think that will be in my next video. So you guys should watch out for my next video. I'll be dropping BTC outlook. So I caught this particular low, so which we are seeking high prices towards some certain levels. Then before we start seeking bearishness, because we have to be anticipating the low of the year very soon on BTC, which might not be automatically the low towards 100k slash all time high, which might not automatically be the low towards that guy. But definitely, if you guys give me a follow, I will surely drop the outlook that we're anticipating the high of, that is the low towards all time high. So you guys, if you don't know where I'm Santiago. So you guys will also do well to follow me on other social medias handle like Twitter, right? Twitter, and also subscribe to my channel. So thank you guys for being with me tonight. God bless you all.